Hey there traders, it's Jeff from thestockbandit.com. I'm sure glad that you joined me for this video. So tonight we're going to take a look at a stock that's facing trendline resistance here. We're going to talk about this idea of multiple types of resistance. You've always got some trendline resistance that you can draw like this, or you might have lateral resistance that you can draw with just a level line. And in the case of a stock like this, this is Marathon Oil, MRO. It's been in an uptrend. You can see a number of higher lows along the way. This thing has pulled back very quietly and very modestly over the past few weeks, and that just looks to be a kind of a digestion phase for the stock before it continues higher. And in fact, it's starting to perk up a little bit here with today's bar and is just nudging past this descending trend line. So is that the all clear, go ahead, get long signal? The big question is that. Here's the thing. With trend lines, you've got to be very consistent. You have to be consistent. You've got to trade them the same way over time, because sometimes you're going to get in, you're going to get head faked. Sometimes you're going to draw them a little bit differently, or you might be using a different type of resistance. And if you flip-flop back and forth, you're going to see a lot of mixed results, and over time you'll not get the consistency that you really need. So if you take a look at this marathon, obviously it's just not trying to cross this trendline resistance, which really was around 29.80. That's right there. But a little bit closer look reveals that we've got this trendline right in here, about 30.15. So that's about 30 cents or so higher, 35 cents. We'll call it 1% above where that initial trend line was. So if I just really zoom in here so that you can see this lateral trend line, you can see that this stock is facing some resistance here that's lateral resistance. And so the question is, do you play this trend line break, the descending trend line break, or do you play the lateral trend line break? Here's the way I approach it. I want to be consistent. And there's not one that's more important of a trend line than the other. The longer the trend line, I guess you could say it's more valid and it's more important. But this is the shorter term trend line. This is what's really been controlling the price action in recent days. So there's an argument there, but this is going to be your call. You've got to either decide whether you're going to be the more aggressive type of trader. You're going to take this first trend line break because it occurs at a lower price on the chart. And with that, that may bring a little bit bigger gains. In this case, you're looking at about a 1% cushion there that you might be up before the stock were to cross this lateral resistance. So you might look at bringing some more gains, but you might also see some more failures, because maybe the stock crosses this level and then comes up to the next one and finds it to be resistance that it can't quite clear. The other method of waiting for this one to get crossed before you get long, that may bring fewer failed signals, which is good, but obviously it may come with smaller gains as well. So the whole idea here is to just be consistent with the way that you trade trend lines. The way that you draw them, obviously they're going to need some adjustments as each bar is painted on the chart. But all in all, determine in your particular trading strategy which trend line break you're most likely to play, and then be consistent over time going forward. Thanks for joining me for this video. I will have more for you soon, but in the meantime, trade like a bandit.